And again, I've said this pretty clearly on most shows, but my expectation is I think we're overshot on the expectation to the downside on earnings. And you see Pepsi here today, and again, it's just kind of the first of those big blue chipper stocks to report. But Pepsi comes out today, and they come in with an expectation of 185. They came in at 197, a decent beat on EPS. Revenue came in hot, beat the expectation by $1.3 billion. The expectation was 20.7. Pepsi comes in at 22. That resulted in a 9% revenue increase year over year. They also raised guidance, full year guidance for 2023, both on the quarterly basis as well as the year over year numbers. I mean, this is a hat trick. And, I was asked the question the other day, are we going to see any hat tricks this quarter? Yeah, we are. Absolutely. There's a couple of things happening. Number one, and definitely check out the podcast for an extended conversation on this, but the expectations for earnings this quarter are dire. What that means is the bar set really low for earnings. Pepsi beats that low bar. Pepsi beats that revenue bar. And the expectations for 2023, they have lowered their guidance for the first 6 months, not Pepsi, but in the market as a whole. The guidance story has been one of in the first quarter, most of the guidance reports were coming out were lowering guidance. In the second quarter, most of the companies coming out were lowering guidance. But for the third quarter, that numbers are starting to shift a little bit. You've actually seen more companies start to increase positive guidance and less companies increase issue negative guidance, to the tune, I believe, 10 companies in the S&P came down off their guidance, and that brought up 41 companies in the S&P to issue positive guidance. And so the guidance story is U-shaping to a certain degree when they are starting to project out into 2023. Now, again, this is just a Pepsi story at right now, but we do have 21 S&P 500 companies reporting earnings so far. And right now, those numbers are coming in into mid 60s at the first start of earnings. And people out there are acting like, oh, this is dire. This is dire. Earnings is dire. This is how the start of every single earnings season goes the last 2 years. Literally, this is the exact same storyline. And so it starts out in the mid 60s and then it improves. The blended growth rate starts out lower. And then because of the average beats of 73% EPS beats and 70% revenue beats over the course of the last 5 years, those numbers improve throughout earnings season. And so, Pepsi just being that one stock early in the reporting season, and we got a lot of stocks to cover. But if you're looking at specifically Pepsi and you're looking at a little bit of consumer staples, I do think specifically in some of these sectors, and consumer staples is the one that stands out to me. Whereas Mark, how many times in the last month have we had internal conversations on consumer staples specifically and been like, what is going on here? What is going on here? Why is this so aggressive to the downside? We're talking about.
I was going to ask you to look at the staples charts. I think, the bear market playbook, from a classic thing is you do not buy defensive things into strength because nothing can really in a bear market go up and away, right?
Yeah.
But the sell-offs, I think you got to take a look from some maybe tactical situations.
I think you got to take a look a little bit specifically at staples, right?
I'm talking specifically staples.
At staples, because again, Pepsi being a staple company, I mean, they come out, beat on EPS, beat on revenue, forward guidance was raised, third quarter sales rose 9%, cost increased 17%. Mark, that inflationary conversation is a positive one for the food-based companies. From a revenue perspective, from an EPS perspective, they're actually making more money and Pepsi certainly adds to that argument. And so, yeah, I do think the expectation is whenever the expectations in the market are dire, it just means the bars get lower to overcome them. Pepsi certainly was able to do it earlier today. Question is, can now we start to see more companies do that coming in off the lows? But Pepsi had a pretty decent report here today, and I do expect, my personal expectation is earnings will be better than what the market expects. Now, how price behaves, that's a different conversation, Mark. That's a different conversation. price usually has a bullish lean coming in at the lows when you're starting at the lows of earnings season. Price usually has a easier bar to go higher than it does lower, simply because there's a philosophy of how much of that is priced in, right? Well, if everybody's dire on Pepsi and Pepsi's down, 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 and they come out and they're saying, well, we're not nearly as bad as you guys have been talking about, meaning the market mentality out there. I know all you guys think every company in the world is now not making any money, but Pepsi, $22 billion on the quarter, expectation 20.7, EPS, 12-cent beat on EPS number. They raised full year guidance. I mean, you can try to throw cold water on it, but the simple reality are numbers. You can't deny them.
No, and Staples,